Everybody, welcome back to Royal Blu FX. In today's video, we're going to talk about some of the trades that we've taken as of last week, which was a Thursday on the 12th, and we're going to quickly do a recap on those trades. For those of you that are new to this channel, go ahead and please subscribe to this channel if you haven't yet already, because we always give out free content. Also, if you're some sort of inspirational or motivational trader and a trader that has been probably trading for quite a while but hasn't yet been trading profitably or consistently, go ahead and right now and refer to this link at RoyalBluFX.com to start learning how to trade with us today. So let's begin.
Gentlemen, the king.
All right, so here we are on the 15-minute chart. All right, well, we usually look at the 15-minute as our high time frame. A lot of you guys may also know that we obviously scalp, so we generally enter on the 5 seconds time frame after looking at the higher time frame on the 15 minutes. All right, so we were here at present on the January Thursday the 12th, right over here. And a lot of you guys know that I trade the US30 Open or the New York Open. I trade the US30 obviously. And so what I typically like to do is look for a range, okay? And over here you can see we have a range. There's a low and there's a high, okay? And the reason why these are low, the reason why these are ranges is because price took out the low and price took out the high of the liquidity, okay? And so once that has happened, I am very interested in this low and this high. So then I scaled all the way down to 5 minutes, like this. Okay, you'll see what happened here later. Once I went down on the 5 minute time frame, obviously I look for the break of structure. Then I mark out my inducements and my fair value gaps. Okay, or imbalances, or IPAs, a lot of other people may call them. Okay, once I do that, then I go down on my 1 minute time frame. Okay, and then I start to see if structure can break on the 1 minute time frame. Okay, and the reason for that is because I'm looking for my entries. So right here I saw some inducement right over here. Price took out the inducement, and we all know that inducement creates liquidity, right? So I'm not typically trying to look for like trend line liquidity or anything like that, or double bottoms, double tops, whatever. I'm just literally trying to see where the inducement is, because I've always said the inducement is the deceiver in the markets, all right? And the inducement is the last point of liquidity. So right here we found the inducement. Price took out the lows here, you can see, and then what we do is we always trade away from liquidity. All right, so we looked at the 5 seconds actually. As soon as price took out that inducement, we were right here down at the low. You can see right over here is our inducement, right? So then what I typically wait for is the chalk, right? We have a low taken out, the high taken out, right? Once this has happened, I see that it didn't meet any of my requirements in terms of entries. Price never retraced fully to mitigate the order block, or to take out some inducement, or fill in the fair value gap and stuff like that. Price just went bullish from here. Now I let this one go, right? But it's a good practice, obviously. It's a good practice, obviously, is to be patient, right? Not to take every trade that you see, right? Or every structure that you see where price is supposedly supposed to go, but you're not, but you're not forcing yourself to look for entries, right? So obviously we're sticking to our plan. Price did not come down here at all, and therefore I avoided this trade altogether. So let's see what happened here. Price actually went up to the destination that I was looking for at this area where the inducement and all where this whole fair value gap is, right over there. And so once this happened again, I then was trying to think, okay, well, prices should be selling off here, because we're relatively selling off, right? And my whole I was looking for my rules again. Right here you can see we had a chalk, right? All this this whole gap was supposed to fill out, right? And then I could have taken a sell from here, right, and had my risk right above, but I didn't do that. I was really just trying to be patient again. Let's speed up this process here. It's kind of slow. As you can see here, we haven't had a proper chalk. The only chalk we've had was right here, okay, right there. And you can see this this area, this low, actually broke the high here just by a little bit. And the reason why is because this high here did not break the low. So this high here becomes inducement in the markets. And you can see how price was taken out right there. Okay. And then price goes down again, gives us another chalk right there, right? But we also got the main chalk, which is that high, and then this low broken. Now, some of you guys may ask, well, why is that a chalk right there? Shouldn't you mark the wick? Well, it really depends on what you see, right, in the market, what you deem as a chalk. To me, since the wicks aren't recorded in the market, you can see here, okay, well, we could have had actually our line even a bit higher there, but we always consider the bodies as the main true structure, not the wicks, because the wicks are never recorded in the bodies, okay, other than the bodies. So we had that chalk there, right? And then I quickly saw that here we had the inducement placed, and then we had the fair value gap, and I could have entered here, but I don't know why on earth I didn't enter here just yet. I didn't feel comfortable just yet, to be honest. And of course, like everything, like the way the markets work and the way our rules work, things have fallen correctly in the correct direction. So what did I do here? I see that we have a break of structure. I see that we're also coming into another engagement of more inducement and more fair value gaps and stuff here. And so I was waiting for this to be taken out. And clearly I'm being patient, right? I'm not rushing into things. And I'm really just waiting for my rules to be met here. You can see we took out the inducement, we mitigated the fair value gap, but we didn't get the chalk, however, okay? And so this told me, of course, I can't be trading into here. I can't be looking for buys, right? At the same time, I'm looking to see if I can see potential sells coming in now, because we are, again, bearish, right? I realized that this was my fair value gap here. I see my inducement. However, price didn't actually go up there and take out the inducement, right? So look what happened. It never took out the inducement. I could have adapted to this high here and looked for sells here. However, I was paying attention to the main structure, not the substructure here, which I should have done. But evidently, everything worked out the way it did. Again, we had a chalk from the high, chalk from the low, right? We have the inducement. We look for the fair value gap. And then we look to strike from there. But again, we never strike there. We never took a sell again. So I missed out on the first trade and the second trade. Actually, excuse me. The first trade being up here, second trade being down here. So I could have melted this, but I didn't. Again, I'm just really practicing my patience on this too. Sometimes, a lot of experienced traders, a lot of the times they just sit on trades that, even on trades like this, if they worked out for the best, if they even though they worked out, it really depends on sort of the how comfortable you feel at the end on that setup, right? Because it's not the quantity of trades that you take that makes you money, it's the quality, right? And the quality of the trade is what makes you the best money, or at least makes you as a good trader too. So let's continue down here. You can see we had on the breaker structure here, but now we're getting really deep into the demand zone here, right down here. And what we know that whenever you're getting deep to the demand zones, or to the supply zones in this case as well, is that the trades are less likely able to play out. And you really need to not be trading when price gets to demand or supply zones. Now, sometimes trades can work out for the best, right? You can wait for a high like this since it's been created, or like for this one, for example, right? You can wait for price to get back up here because we are making beautiful order flow to the downside. You can be trading only if price actually gives you a good setup here, right? The chalk boss, right? Entry, and then sell and just TP down here. But there's usually a less likely chance that price will perform this way correctly, because the nearest, when you get near to the supply or demand zone, the less probable that trade is going to happen. So let's see what happens. Okay, right here we are at a fair value gap, right? There's no doubt about that. We also had some inducement in here as well, and so all that was taken care of right there. Essentially, if we zoom out here, you can see all this liquidity was taken out right now by this move down to the downside. Okay, and so my objective here was to look for buys, clear and simple, because we are at an area where we're at a discount on the higher time frame, and now we're looking for the buys. Now, you might be asking me, like, why are you looking for buys here? You're selling here, not buying. Well, that's very true, okay? Trading is very counterintuitive, if you guys understand this, okay? It's like when somebody buys, somebody's going to be selling. When somebody's selling, somebody's going to be buying, right? So just because someone's buying doesn't necessarily mean necessarily mean that the market, that you are correct in what you're doing, but we're correct only when price is in the correct zones. Okay, and what I mean by zones, I mean by like fair value gaps, demand supply zones or what have you. And so, understanding the nature of what is happening here, okay, everything is meeting my rules. We've taken out liquidity. We've also come down to a discount zone, right? Because we have a break of structure there. You can see that, and I'm now looking to take this home right here. So, what am I looking for here? I'm looking for a chalk when price gets to this demand zone. You can see that nothing's happening. We're just ranging. I'm not rushing into things. If we needed a chalk, excuse me, if I'm looking for a chalk, I need this high to break over here first and foremost. Okay, because that's my next high. So that's a high right here. This is my low. All right, this is a swing point, a swing high here, and a swing low. So this is my range. So if anything, price needs to break this high. So I can wait for that chalk, right? Chalk boss, whatever, like that. Come to a demand zone and then take the buy. So let's see what happens here. So okay, prices are continuing bearish here. All right, so I'm not buying anything yet. I'm waiting for something to happen, right? This is the whole point of trading. It's really just to wait and sit in your hands and wait for your confirmations here. So I got the chalk to the downside, the chalk to the upside, right? And this confirmed to me that I have a clean chalk, right? So that's one of my rules. Once price does this, there's two types of entries, which I won't show you here. Obviously, it's more for the paid members, but I might be able to reveal some of the entry types here on our YouTube channel if I get enough comments and likes on this video. All right, so we got a chalk here, right? Evidently, I'm just waiting for price to fall back and then to look for the buy here. We did that, right? We marked out our inducement, our fair value gap, of course. I also marked out, as you can see right here, the reason why I did this, I used my 50% equilibrium line, the Fibonacci's. Let me just show you guys right here. That blue line right there is my 50%, right? So I took my Fibonacci's and I went right at the high of that gap, the pink zone, right, from the high to the low here. And the reason why I did that is because this huge area here, this high to this low, is my order block on a higher time frame. Okay, I know it prints like about 3 or 4, 5, maybe even 5 candles here, but essentially this is your last down. This is your order block. This is your last down or sell candle before the buy. So I was interested in cutting this area in half and doing about 50%, right? And once price got to the 50%, I was more intact on looking to buys here and to buy. So as soon as price came here, right, tapped my 50%, I bought. Had my risk at the low here. Now I could have gone a little more safer and just gone right below here, but I wouldn't have done any more than that because I know for a fact that once I get the chalk, I'm all the way home on this one. So, but anyway, everything played out right perfectly here. All right, you can see that prices started going bullish here. I could have, however, also looked for another entry because, like structure, everything is fractal on every time frame. So right here we had a break to the downside, a break to the upside, right? We had the inducement. We also had a sweep of the lows, right? And this would have been your entry right here. So the wick went right below our inducement, and boom, prices started to go bullish here. So I could have been in 2 trades here, right? All right, so I targeted this high here because that was our inducement right here, and we had this high here that wasn't broken. So I didn't have nobody has a clue, right? Nobody has a clue if price breaks that high. So I can't confirm and say that I should be targeting above this high here because there's no confirmation just yet, right? So what I did was take an early entry here at this low and just targeted this inducement and took most of our partials here. So we took most of our partials there, and then I let the rest run over here to the other inducement area, to the fair value gap, pretty much close to that high, and to collect the rest of the profits over there. Now, this is a safe way to do everything because, again, you want to the part of trading is really knowing your risk and your management, okay? Managing your trade, but managing sort of risk, right? And like risk, when we talk about risk, that doesn't just mean your entry, right? Like this risk zone here that you're looking to buy, right? And then like cutting off the trade as soon as you get out, right? No, that also means your target. Okay, risk also means your target, meaning, and the reason why is because, you know, it's very important to know where your exit is, right? And your entry. Your entry is just as important as your exit. So for me, knowing how to control my risk and knowing how to, you know, sort of control my risk factor, I guess, into trading, is to also know where to target, because that's where I know where I'm going to profit from, right? Had I said, okay, I'm good to go and I'll just target this high over here, right, that would be the wrong way of seeing risk. I need to be knowing, since I know that we're bearish here, I'm not going to be stupid enough to look to, you know, target anything above this. I just need to be targeting at the high here because price is not broken yet. All right, so price continued bullish here. After I have 12% on my laptop, so this might die before I finish. But bear here with me. Right here we had a break of structure. This was a flip. We don't buy at the flips. We wait for the flips to be taken out, or at least for price to confirm that this is a flip. Okay, and to hold this low here, because you can see there's a low, there's a high, there's a low, there's a high there. Okay, so price confirmed that this is a flip only because price confirmed and held this low here. Okay, you can see price is not retracing 50% of the way or looking to fill in any of the imbalance. It's just wanting to continue bullish here. Also, this high here, this high's objective is to take out the liquidity over here, which it just did. This is all the liquidity that you see here, and now price wanted to confirm that it's going bullish from here. So now this is new structure that that we're working with. However, I missed this entry. This is the continuation entry. All right, and I missed it because I was busy doing something else, you know, and I let this thing run, obviously. So I'm going to continue. I'm going to play this a little quick here. This would have been a great entry, and we were going to target this high here, right there. When we were targeting these areas of inducements because these were the areas that were most likely going to be hit, and then price would just retrace from there. And we obviously wanted to take advantage of the whole swing or the whole impulse, and then take more money out there. Unfortunately, of course, for us, we didn't take this, so you know, that's all good. It's all fine because there's a lot of opportunities in here that you can take. We did, however, take one more last trade, which was right over here, which I'll show you in a second. So here we are. So as you can see, when I was present on the laptop, I opened up my laptop and I saw that we were ranging here. You can see a complete range happening, okay? But that doesn't mean that ranges aren't tradable either. You can trade them just as long as you know what is happening, right? There's a lot of inducing happening around here. There's a lot of fair value gaps left open, right? So I saw that we had this area here as, there you go, 9%. I hope I can finish this video before my laptop clonks out here. I can see, if I zoom out here, you can see that this is my fair value gap here. I had another fair value gap here. We had a low and a high, low and a high. Okay, so I was following structure bullish because we understand the intention of this move. When we bought here, we understood that prices should be pushing bullish here to at least meet this high now, this major high. So we can see that the high was mitigated, but it wasn't fully mitigated. So it left some inducement. And then as you can see that this low over here never broke the high. So this becomes inducement in the market. Okay, also this whole area from here is also inducing as well. And so we didn't buy here. We were just watching what the market was doing. You know, now that we had a nice trade, I'm not going to just go blindly on other, you know, taking more trades, you know, because the more you trade, the more risk you're exposing yourself to the market. So price broke a chalk here. I can see this clearly. We had more imbalance in the market. This is also an inducement, which also becomes a chalk in the market as well. And then we had more inducement there. Price came and mitigated this fair value gap, and then price broke again. So now my intention is, now that we have two breaks of structures here, this confirms my range. Okay, this was a flip actually as well, because you can see this high never went 50% here. It just stopped all the way at the high here. If I put my Fibonacci's here, you can see that price had never retraced below the 50. right? So a lot of people that say, oh, you don't trade, you know, when you're don't trade if you're in the premium, you know, whatever. Well, you know, it's kind of a lie in my eyes, because you can trade anything just as long as you know what is tradable and what is not. So this to me is a flip. I know how my flips work. Once we have taken the liquidity from the highs, this high fails to go below here at the 50. It just stops at the high here and it flips. Okay, so this to me worked out really well. I see the chalk there. I saw that we had our inducement and our fair value gap, and then I literally waited for prices to tap. Actually, not that pink zone, not that high over here. I was waiting for this low here to be tapped right there. Okay, right below our inducement, right there. Okay, and once that happened, then I was all in. Notice how price didn't tap us, and now it did, and I was all in on this trade. Okay, this screamed to me, you know, like money. It just screamed money to us. Okay, so I bought here and held to this high only because there is our last point of supply there. Now, if you can zoom out here, you can see that we've been going high, low, high, low. We're just going bearish here, right? But I'm obviously going against the trend, which is okay, again, just as long as you know what is actually happening in the markets, okay? And we had, what, a 7.3 R on this one, and we had 11.5 on this one. So it was a good day for that for us. This was just an example trade, a mock-up trade that I had here, so it wasn't a real trade that we took. But yeah, guys, that's how we took our trades in the market on Thursday, January the 12th. So if you guys like this video, go ahead and subscribe to this channel and leave a like on this video as well. We truly appreciate your support. Until then, we will see you on the next.